Bloomberg Audio Studios. Podcasts, radio, news.
SoFi shares, like the rest of the market, slumping today. In fact, having its worst day since March of last year. The fintech lender publishing perhaps a forecast that seems to be below where the market had wanted to see. We've got a broad tech route, of course, linked to DeepSeek more broadly in generative AI over in China. But here to discuss the earnings, SoFi CEO Anthony Noto. A tough day to report earnings, Anthony. And I ask you about the forecast because, look, your revenue was at record rates, adjusted revenue up 24% for the fourth quarter. But you're pushing us forward in a forecast that isn't as high as the market wanted. Why?
Well, I think two things. One, 2024, we took a pretty conservative approach to the year in terms of our growth and our profitability. We really wanted to make sure that we were able to drive strong profitability in 24 to achieve GAAP profitability, to ensure we reinforced our balance sheet and a capital cushion, and we did just that. Prior to 2024, we had committed to a balanced approach to growth and profitability, where we would reinvest 70 cents of every incremental revenue dollar, and we call that 30% incremental EBITDA margins. So we took our revenue forecast for 25 up. We're in the best position we've been since I've been here at SoFi for the last 7 years. We're calling for 25% revenue growth, strong margins at 26%, just not an expansion in the margins, because we want to invest in the massive opportunity that still sits in front of us. And so we took revenue guidance up, and it's about 10% higher than the street, but that will require more investment, and it'll help us ensure we have growth beyond 25. And we also took our revenue guidance for 2023 to 2026 on a compound annual growth rate basis higher as well. So the profitability of the business is there. We could drive more to the bottom line, but we think that's not the prudent thing to do because we just see massive growth in front of us, and the ability for us to keep driving member growth and product growth of more than 30%, which we've done, and revenue growth of more than 25% is what we're calling for through 2026.
Anthony, of the investment that you just described, what portion of it will you be putting toward artificial intelligence? It's the topic at the top of everybody's minds, and people are watching how companies are deploying it. Do you see, for instance, an agent-driven service perhaps at SoFi at some point?
The vast majority of our investment going into 2025 and 26 will be in building unaided brand awareness, becoming a trusted household brand name. We have great products. The reason why we're driving such strong product and member growth is because the products are very differentiated. And when we make people aware of them and they use the products, they not just use the first one and they gain trust with us, they use the second and third one. 30% of our product growth in the quarter of 34% was from our existing members. About 40% of our members take out a second product within 30 days. So we'll continue to invest in differentiating the product. SoFi Money is a great product that has a high APY. You can do person-to-person payments. You could do Zelle, auto bill pay, 2-day early paycheck. And so we'll be investing in that. We'll be investing in our Invest product to expand the selection for Invest, in addition to other product categories like insurance and credit card and small and medium business lending.
You want to be able to offer crypto again. And that's something that the administration's talked a lot about. Look, on a day where we see such volatility that engulfs crypto too because of DeepSeek, is that really a product placement that you want to get into again?
If the regulations change so that cryptocurrency is permissible by bank holding companies, we would absolutely provide not just what we used to provide, which was the ability to safely and securely trade Bitcoin and other cryptocurrencies, but we'll also go into other areas like custodying and clearing, in addition to asset-backed lending, et cetera. But that will all be gated by the regulators, which we think should be coming over the next 24 months, and we'll be ready when it does.
Ultimately, are you feeling more risk on in this environment, the new administration, a way in which to develop your business, maybe M&A, because it doesn't feel like a risk on day to day?
We are definitely leaning into 2025. 2024 was a record-breaking year. We had record revenue, profits, returns, member growth, product growth. Couldn't be happier with the year that we had. The most proud I've been of the company since I've been here. But I think 2025 will be even better. We think the outlook is the best environment we've operated in over the last 7 years. Our business is bigger, stronger, and more well-known than it's ever been, and we have more resources to go after the opportunities. So we love our competitive positioning. We like the macro backdrop. It's a very different outlook than when we came into 2024, and we're definitely being more aggressive in innovation and driving durable growth and strong returns.
Anthony, back to the regulatory side of things. What is the one thing, one hurdle that you would like to see the new administration and Congress clear for you?
The biggest question is what will bank holding companies be allowed to do with cryptocurrency? What will be permissible? And that clarity is really critically important. The interest rate cycle, I think, has pretty good visibility and transparency to that. I think the economy also has really strong economic indicators. The big question is how much can we innovate? How much can we invest in these different asset classes that our members want to reinforce their ability to not just borrow better and save better and protect better, but to invest better. Investing is critical to reaching their long-term financial goals. We want to be there for every one of the major financial decisions our members make in their lives and all the days in between. The key is spending less than you make and investing the rest. So the more opportunities we can give our members to invest, the faster they'll get to their financial outcomes.
Anthony Noto, SoFi CEO, on the day of your earnings. Great to have you on. Thank you so much.